Good day traders, Richard Jacobs here and welcome to the Underdog Trade Education channel. I thought I'd mix things up a bit and we'd start off with looking at the intraday chart of our top 40, and this is a 15-minute chart which you see up on your screen at the moment. And just to zoom out for a little bit and recap on what's been happening in the market, we actually saw, as the year began, we saw the market move to the upside, actually break to the downside, then sort of retrace, form a bit of a double bottom here in a sense, as it found support around about that 52,200 level, and then it pushed to the upside, put in some higher highs, higher lows, well, not quite a higher low, but certainly pushing to the upside in a bit of a messy trend. And then it hit this resistance level around about 53,300, put in the higher high, retraced, tried to push to a higher high here, but couldn't get past that level. So we tested the level once, we tested the level twice, we put in the double top, which confirmed on this move to the downside. Then the market pushed up again and it actually took another shot at that level, and it's proving to be quite a strong overhead resistance level over here, as we now saw the market push to the downside today, put in a bit of a choppy retracement over there, and now it does look like it wants to go into a continuation move over there. So putting all of this together, what are we seeing? Well, a couple of things. Firstly, I mentioned that double top over there. Once that double top confirms, this is quite an interesting here. Once that double top confirms, which is on this candlestick over here, right there, we get the close below the midpoint of the double top. That validates the double top, and projected targets were what was met today. You actually take it from the high all the way down to the midpoint, and you'd project a target around about those levels over there, which you can see we tapped today. This, taking that trade, you'd have to put your stops way up above the double top, and you take some strain, especially as it moves up to retest that resistance level over there. But certainly it would have yielded targets. Although that's speaking with the benefit of hindsight, in a sense of it's not a trade that we did recommend. So that's one thing that's played out on the market. Spoke, I think, in our last recording about some of the advanced patterns over here. There was a bullish bat pattern to the upside, and then I think yesterday evening we had that bearish. Let's have a look there. It was a bearish Gartley pattern, I think. The market, yeah, there we go. The market would have pushed up into that 127 level, and there we go. In fact, it pretty much reversed on a dime into that bearish, and that bearish Gartley pattern played out, which we flagged in the last recording. That's of course if advanced patterns are something that you do consider in your as one of your trading strategies. From a pure structural perspective, we're just seeing this strong overhead resistance level, and it looks like the markets we put in a bit of a break to the downside over here. To get completely bullish, we'd actually want to see this level over here around about the 52,200 zone giveaway. But certainly we've got a lower low, a lower high, and if we see a follow through tomorrow, which it could potentially happen, then we could see another lower low forming. So we'll keep an eye on that. Still quite choppy on an intraday basis, and really that's one of the reasons we've been saying that to a large extent for most of this week, we've been standing aside or trading extremely small. If I pull up the daily chart of the top 40, you'll recall we spoke about these ABC days, and C days being those days that the market's really in consolidation. There isn't really a follow through on an intraday basis in terms of trend, etc. And over the last 5 days, 4 of them have been classified, including today, have been classified as C days. So those are days we've really just stood aside. What is interesting is that with that weaker close, even though the market did close off its intraday lows, we are looking at tomorrow, Friday, as being a day that we could see some opening up of ranges. Slight uptick in the ATR as well, day on day. So we're gonna max out our trade size tomorrow, and we're gonna classify it as an A day. So that should be interesting to see if we can get any trend running going into the weekend as well. And there's a bit of bias not that we let bias influence our intraday trading strategies, in the sense that they're quite mechanical, and they operate they operate in a very rules-based type way, in a very rules-based type way. But certainly there could be some downside bias in terms of predicting which way the market's going with this bearish close of a year. And the fact that, as we've been saying, you had that break of structure and it's retraced all the way back into that zone between the 50% and 61%, 61.8% Fibonacci levels. And let me just highlight that. There we go. That zone really is, so you can sort of regard it as some kind of a kill zone for where markets could retrace to. And we've been waiting for some kind of a reversal signal to see it, to confirm that this market's going to move to the downside. I wouldn't quite use this candle as a confirmation of that reversal. Ideally, you'd want to see it close near its intraday lows, in which case, or even put in a lower low and lower close. Let's put in a lower low, but certainly not a lower close quite yet. But still, we do favor some continuation move to the downside as on the potentially on the cards as we go into the end of the week. We mentioned the C days. Again, we had another C day, so let's just have a look at what that's done to our equity curve. Well, from our own weighted trading perspective, absolutely nothing, because where things are positioned from a C day perspective, we take nil trades, we don't actually trade them. So again, we saved ourselves some points because we had a couple of trades today which were negative, bringing the standard equity curve down to 377 points, and we're currently sitting at the weighting of 1,203. So again, just emphasizing that point that considering the market environment is important in terms of your intraday trading, or doing an assessment of what you think the market's going to do from not necessarily from a directional bias perspective, but more from a range perspective, which is what we're looking for as trend traders. So that's what we're seeing on the in terms of the structure and the markets. Let's have a look at the international markets. Let's have a look at the S&P. So I'm just going to pull up a sorry, I've got all kinds of filters over here. Just see where it's okay. That's a 4-hour chart of the S&P up on the screen, and as you can see here, we had that bit of a retracement, not really deep enough for us to try and get involved in. When we look at these pullbacks, we try and get it at least. This is probably into the, let's have a look. Yeah, it's in the 23.6. Yeah, pulled back into the 23.6, which is quite a shallow retracement before it continued to the upside of a year, but certainly putting in new higher highs and higher closes at the moment. So the US markets continue to look exceptionally strong. If I have a look at what's happening on the currency front, pull up the Rand dollar. We're still in that zone. We're still chopping along sideways over here. Nothing much to report. We've been waiting for some kind of a comprehensive break and close outside of that zone, but it's not forthcoming at the moment. And again, I come back to the point I made in the last recording, which is, if anything's going to hold this market back, it's the fact that the Rand dollar exchange rate is really not doing anything over the past few days. It's been chopping along sideways, so there's no there's no impetus being put into the market as a result of the exchange rate, and at the same time you've got that very strong international, that US market pushing to the upside. And I suppose that to a certain extent is holding back the continuation move on the that we've been anticipating and expecting to start playing out. So yeah, as we go into the end of the week, it's going to be interesting to see whether or not we can get that follow through that we were expecting, with the market moving back down in the direction of the overall longer term daily trend over here. So that's pretty much what's been happening on the local markets. Let's have a look at our international or offshore trading challenge, which as you will recall is a little challenge that I've set myself in my own personal trading account, where we've taken essentially £10,000, and we're going to be trading multiple currency pairs, some commodities, some international indices, etc., on a rolling portfolio basis, using pure price structure trades. We're trying to get in, we're trying to get out. We're not trying to necessarily shoot the lights out in terms of individual trades. It's more about having a churning and a churning portfolio of trades playing out. So let's have a look at what's been happening on that front. And then let me just get that sheet open. Give me 1 second. Right, so here's our results thus far. I've highlighted the open trades in blue over there, and I'll just run through some of the trades that we've been involved in, or we did flag in our last recording, or came up subsequent to our last recording. In a second, results point of view at the moment, 16 trades, 44% win rate, and that's including the open trades at the current levels, at a risk to reward of 2.01 to 1. So that's not bad, pretty decent. Happy with where we are at the moment. One of the things I have experienced is, as I said, it's a rolling portfolio, it's a churning of trades. So you almost at no point you draw the line in the sand in terms of how you're doing. So you always need to assess this thing on an ongoing basis, because you generally always have open trades out at any given point in time. But let's have a look at a couple of them. Let's first kick off with this. I'll do the open trades last. The Aussie US dollar. So let me pull that up. It's the Aussie dollar, US dollar. So we had, just make that big. So this is the opportunity just flagged over there. We flagged it in the last recording where we got long. We actually got long at a decent level, giving us very minimal risk on this particular trade, and we were aiming for this previous swing high over here. Remember, our play was the market had pushed up. We looked for entry on the retracement. That was the one that stopped us out, where we got involved, pushed up, and then stopped us out. The second one did much better, pushed to the upside, had a bit of a shimmy in the middle, but then it certainly pushed up into targets. In fact, it's exceeding targets, pushing even further to the upside. We're only trading one contract on this thing, so not really pushing for extended targets under this strategy. Maybe something that we look at later in the year, but for now we're pretty comfortable taking our money off the table as we hit those targets. So not a bad trade to get involved in. Let's just pull up what is the next one. Sorry, bit of a glitch here. Alright, then we had a couple that actually just took us out. Euro, pound, pound USD, and pound yen. So let's have a look at some of those. The euro pound, all very similar in terms of approach. The euro pound, we were looking to get short. The market had broken structure to the downside, or at least put in a continuation move to the downside. Retrace. We put in this decent looking candle here, reversal candle, very long wick, closed near its intra-bar lows, over 4 hour lows over there. We got involved to the short side. looking to ride it back down into this target zone over here. Market started out well and then just rolled to the upside, popped us out of this trade. This is again one of those ones where we might take a second bite of it. This is the 10 o'clock candle forming at the moment. If we get some kind of a clear reversal over here, we'd get a lot short again. We're still in the right position for that. Put our stops in above the swing highs and really shoot down towards this target zone all the way down here. What was the other one we wanted to look at? We want to look at pound USD. Pound USD, so this big structure over here. Market had pushed up to the upside over here. We were in this sort of sideways consolidation mode, then pulled back. Couple of things here. There's actually two interesting things here. One is we then have this candle printing over here. We just highlight it and make it clearer. That candle over there, we decided to get long, look to push it to the upside. Instead it rolled to the downside and stopped us out. We then get another candle over here, very bullish looking candle, higher high, higher close, very strong. We actually have a trade waiting right there. We're waiting for the market to put in a bit of a retracement over here after this bullish push to the upside. The reason being, if you look at our target reward to risk, being there's a stop, we want at least a 1-to-1 reward to risk. I don't like inverted reward to risk ratios. I think they're just messy. So at least a 1-to-1. In this case, it would be risking £62 to make £62, that kind of thing. If the market just pushes to the upside, we'll let it go. We're not going to chase it. So be it. As I said, when you're trading a portfolio of these things, then any one individual trade, missing it, or it's really not a train smash at all. Pound yen. Sorry, I'm going to move a bit faster here. There's also one that stopped us out. Market had pushed up to the upside there. We put in the retracement, came back down. We actually had two bites of this one over here. Bullish candle, got long, stopped us out. Second bite over here, bullish candle, got long, just stopped us out. If we find another bullish candle, we're going to go for it again. One of the things I'm trying to do as well is I'm keeping the stops very, very tight. So what that essentially means is that it allows me or affords me the opportunity to get involved in a trade. So I'll fix this now. It affords me the opportunity to get involved in a trade multiple times, or to rather than getting involved in a trade, putting your stops really wide, and then running it all the way down, taking the heat. If a trade is not moving in my direction quickly, I prefer to get out as quickly as possible and then look for either a new opportunity on the same pair or find a different market or pair to trade. Okay, fix that up. Right, what do we have on the screen at the moment? This is the Euro USD trade, the open one. And as we flagged in our last recording, we got involved over here. So the market pushed to the upside, put in a bit of a double top over here, put in this retracement all the way down. We got involved on these candles over here where we had a bit of a a tail to them. Very limited, as I said, risk. We're £17 and we're shooting for this zone here. We're actually shooting for about £115. Market pushed up, actually came all the way back down to entry, but we said we're going to be patient with it. It's pushed up again nicely, and it's doing a bit of consolidation at the moment, but hopefully we can just see it pushing up into target. So we'll keep an eye on that one. Other one is the USD franc. This is a short trade. Again, market had broken to the downside. We put in a retracement, took two bites at it. This one over here we got short and got stopped out, and then this one over here we decided to get short. Again, didn't start out too well, pushed to the upside, but we've got a bit of a wider stop over here, putting it outside of this swing high. still giving us a decent reward to risk, or target reward to risk, to this previous swing low over here. And then the market pushed down, and again this one's also in a bit of consolidation at the moment, but still nicely in the money, and we're just looking to see if it can push down into our target zone. So I mean, that's pretty much it from the currency perspective. Nothing much that I'm seeing to trade in gold or oil at the moment, and as I said, the S&P is pretty much just pushing up. We're not taking breakout trades. If you are a breakout trader, you're probably trying to get involved in the S&P trading action. The only other potential trade is that one on the pound USD, where we're looking for another potential entry, our third shot at a potential move to the upside over there. So guys, that's pretty much it from our side. I wish you all the best tomorrow in your trading as we go into the end of the week. Be safe in your trading, exercise good judgment, and I shall next chat to you probably as we go into the new week. Cheers.